The Netpicks group of traders has put together a list of the best day trading tips that we could give new and experienced day traders. Now, day trading has really changed over the past decades as technology has made it a whole lot easier for anybody to get involved in the markets. And the pitch was that you could work from home with little capital, little skill, and have all the freedom that you could ever want. Well, reality is different, and many who thought they were day traders were actually just pushing buttons, hoping for the best. And many still live in this fantasy, and they never look at trading as a viable profession, one which demands a disciplined approach and realistic expectations. Now, it's not all doom and gloom, because there are many who do make a great living either working at a firm or in their own trading business. So this shows that it's possible. Now, failure in trading, it does not have to happen to you. Trading involves not only the mechanical aspect, but also the internal work on yourself. And I can honestly say that most people that we talk to at Netpicks, the mental game in finding out who they are as a trader is not high on their list of topics. And that's a huge mistake. Now, day trading for a living, it is possible for those that approach all aspects of the trading business and beyond the method they use to trade. It requires a total package to be successful. And for those that embrace that, I think they have a pretty good chance of finding some level of success. Now, there are a lot of tips that people will give you when you're embarking on a career in trading, whether it's in Forex, futures, stocks, doesn't matter. And I'm going to skip the most common ones, and I'm going to list some tips that we have found to be particularly useful over the years. Number one, take full responsibility for everything that happens. Now, far too often you'll hear traders complain that the market was out to get them. Well, the truth is that for most of us, the market does not even know that we're here. If your stops are being gunned, for example, well, then you've put them in the same place as many traders have. It's no accident that price can and will breach a support or resistance level, take out stops, and then continue on its way. And if you're going to point fingers everywhere but at yourself, you become a victim. And that is not really an empowering state to be in. Things happen. And at the very least, the only person who put you in the trade was you. Those sharp news-driven events that nail your stop and bring about slippage, well, they only affect you when you're in a trade. So whatever happens, take responsibility for it. And this is probably the hardest trading tip, although it doesn't just apply to trading, because it forces you to acknowledge that you are accountable for your own success or your failure. It's really tough to point the finger at yourself, especially when it comes to losing money. But pointing at yourself and being accountable is exactly what you have to do. Number two, don't focus on the money. We're in the business to make money, so it makes sense to focus on it, right? Well, no. You should certainly focus on the money when it comes to setting your risk. But to focus directly on the money can make us do some really silly things. Focusing on the money can cause you to move your stop further from price. You take small profits in fear of losing what you have and then jump in to not miss the move. That's not conducive to longevity in trading. Price is going to do what it's going to do regardless of what you do. Most of us cannot directly influence the outcome of any trade, but there's something that we can easily do. Now, it is assumed that you have found a method to trade and you have a plan to follow. You've tested that plan and you found that your wins are larger than your losses, and perhaps you lose more often than you win. What you can do, what you should focus on, is executing that trading plan you've tested and let the chips fall where they may. That's all we can do. When the variables line up for an opportunity according to your trading plan, you don't hesitate. You execute, you manage the trade, and you leave the outcome to the random distribution of wins and losses. Keeping your eyes off of the profit and loss column while you are trading can really do wonders for your consistency. Number three, risk control is paramount, and you have to accept that. We all look for the greatest entry when we first start to trade because we think that the setup is where the money is made. Now, logically, it does make sense because we have to get into the market somehow. But what you do after you get into the market and when your money's on the line is vital for day trading, swing trading, and position trading. Profits add to your account, but the losses can take you out of business. Be an exceptional risk manager and ensure that whatever you're putting up per trade, you can handle multiple losses in a row. If price is approaching your defined stop level you place according to your plan, take the loss and move on. If you let that loser run to the point of extreme pain where you're forced to exit, you might never recover your capital. And I want to add that many traders place their stops close to the turning point or the range break because they have a bigger position size. Well, the problem is that you become part of the cluster of stops that the bigger fish know where they're sitting. And we've all had it happen where we get stopped out and price reverses in our intended direction. Putting your stop outside of the usual zone may decrease your position size or negate the trade for you because your account size is too small, but at least you won't be part of the herd that just got hit. 4, be stingy with your broker fees and other costs. While most brokers will try to stay competitive, you should always be on top of the fee structure of the one that you're using. From clearing fees to account management charges, all of these will eat into your profits. Trading is a business, and like all good business people, you should try to limit your costs without sacrificing the quality of the services you need. Do you really need to pay the commissions of a full-service broker if you are strictly independent? On the same note, platform fees, paid trading indicators, and other software can also be an issue, and you should evaluate your need for the trading platform that has all the bells and whistles. For me and the rest of the traders at Netpicks, unless we're swing trading, as long as there's no lag time and the platform is not a resource hog, we can live with it. Number 5, accept that a winning trade against your rules is a loser. I want you to picture that the market is making a huge push to the upside and not wanting to miss the move, you just jump on board. Well, the price just keeps pushing north, and at the first sign of weakness, you mark it out of the trade and you bank the biggest one trade point total you've ever had. Like those that took the first cigarette drag and loved the feeling, it is only a matter of time before you will be damaged. And oftentimes that damage cannot be reversed. Being rewarded for a lack of discipline can virtually ensure that you're going to do it again, and that is why you cannot congratulate yourself if you win. Take those profits and just donate them so that your bad play can actually do some good, because for you as a trader, it's damaging. The best thing to happen to a trader that is undisciplined is to take a loss so there is a negative outcome to something that they should not do. Make your trading plan, and anything that falls outside the parameters of that plan is off limits. Number 6, set your trading business hours. And it's really easy to trade around the clock, but you got to ask yourself, if a boss asked me to work outside my set hours, would I gladly do it? Most people would probably say no, but because we have access to the markets around the clock, traders want to find opportunity when they can. We trade to live and not live to trade, so it's important to find structure when it comes to your hours. Interesting enough, people say they trade for freedom, but they end up being slaves to the round-the-clock features that the markets offer. Perhaps you have a pre-open routine where you check the news, the overnight action, and depending on the type of order, you find the support and resistance levels where you will look for opportunity. Then, for those in North America, you are ready for the New York opening bell, and you will dedicate 2 to 3 hours of intense focus to your day trading. Now, barring that, you come into the afternoon session after the doldrums, and you trade the last few hours of the day. The rest of the time, you're away from the markets, or perhaps you're doing testing. You're writing in your trade journal, your trade log, or you're spending time with the family. Most of us want the freedom that trading can provide, and that includes set times that you work and times that you don't. Intraday trading can help build your wealth and allow you to make a living, but it can also prevent you from having the freedom that you were originally seeking. Number 7, trade from a balanced frame of mind. Trading can have an emotional impact, however slight that it could be, but coming into your trading day unbalanced can make it worse. Being focused on the external issues outside of the trading world can also cause issues with your ability to function according to your trading plan. Those times of stress that we face, they're the best times to step away from the charts and just stay flat. Our psychology has a massive impact on the success or the failure that we'll find, so it's really in your best interest to approach the session in a balanced frame of mind. And you also want to stay away from the risk taker mentality, and also the flip side where caution prevents action. How you feel on a particular day can actually influence either one of those and cause you to deviate from the trade strategies that you've tested. How you approach your trading day from a place of calm is something that you may want to work on, whether it's meditation, music, or even affirmations. Being balanced during your session is just another cog in the wheel of success. And now the biggest tip of all, and I've touched on this a few times, and so it's really important, and it deserves its own section, and it's having defined rules for entries, exits, and risk management. Many want to learn about trade entries, and as mentioned, the criteria has to come inside of a complete package. The entries that you find are the only ones you should be trading, and there should be no, well, let's see if this one's going to work, which is simply a lack of discipline. There is not and never will be a perfect entry. It doesn't exist. There's never going to be a perfect exit. What will be perfect is your unconditional commitment to trade according to the plan you've tested and become proficient in. And to this day, I still find this to be a challenge. I may have something I'm looking for, and it's difficult to not utilize other variables in addition to the original criteria. It can be a challenge to ignore what you know, and it can be something as simple as also seeing a minor channel breaking out in addition to my other criteria. The problem is that the minor channel breakout, it's not something I was looking for, so it should not influence anything that I do. I take responsibility that it is something that I continually must work on. I know that time and experience will deal with that as long as I do not act with any variable that's outside my trading plan.